Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth analysis over on natural gas. For this we are going to be using the natural gas futures, so ticker /NG. Before this we did cover crude oil. Reason for that is because that is the main reason that natural gas is moving, so if you want to check that out, was a video posted before. But to get straight into it, firstly, what was the news related? So OPEC Plus announced a surprise oil production cut of over 1 million barrels per day. So obviously on this news, you're going to see the crude oil price pump, and at the peak it was kind of around 8%. But on this news, we also saw nat gas fall. So kind of what's the fundamental reason for nat gas falling off this kind of news? So obviously, nat gas and crude oil are going to be used for different things. Nat gas is more used kind of for the heating element, while kind of crude oil may be used more kind of for the production of things, but they do still kind of impact each other, because higher oil prices then can just lead to an increase in cost of production and kind of transportation for natural gas. And so that's why usually you see if there's an OPEC cut, natural gas will usually move from inverse from it. So that's kind of just a fundamental reason for it to move. Now, what are going to be those key technical levels that we pay attention to? Again, for this we always do use standard deviation channels, especially on the crude oil, where I think it's a lot more clean to be trading off the deviations, just because they're moving to them a lot more fluidly. But on nat gas, because we have hit down or very close, well, we did hit a really low, under $2. It looks like we're pushing back that way, and because of this, and you go back a while and we were sitting above kind of $10, when you kind of get these big moves, it makes the deviations very wide, and obviously if they're very wide, it's a lot less likely that you go to kind of hit them. So it can make nat gas a bit harder to be trading off deviation levels, just owing to that fact. But if we do push to the downside, kind of what are key things I'd be paying attention to? Because as of right now, actually, it's in an area I wouldn't like to be trading, because at 165 to around 3, this is our statistical mean zone. And if you understand statistical mean, or you watched this channel before, statistical mean is basically considered fair value. So if we're traders, usually I don't like trading in the area of fair value, because there's not too much of an edge. It's not extremely overbought, it's not extremely oversold, and me, more as a reversal trader, I just find it a lot harder to be trading within a zone like that. So to me, right now, there isn't really a tradable range. Obviously, we do get the weekly nat gas inventories. Then there is going to be a trading opportunity. It's more of a scalp, kind of a short 5-minute trade kind of at the longest. And that doesn't really matter where it is on the longer term charts. But if I'm looking for kind of more of a trending move, again, I'm going to usually avoid it within this area. So from a support side, really, we only have one support off a deviation perspective, and that's going to be at 0.8. Obviously, very far from where we are now. A big kind of massive downside from its 52-week low. So are we likely to hit that anytime soon? Probably not. Obviously, we are coming into the summer. Nat gas, obviously, we don't need as much heating and stuff like that coming into summer, so you tend to see the nat gas futures in general kind of decline in price coming into that. But overall, again, still very fast sell-off, probably unlikely to see that. So for me, I think it's going to be more waiting for the resistance targets, and if so, then I'm looking at around 4.2, then at 5.25, and 6.8. I mean, these are going to be the key levels I'm paying attention to the upside. Again, the way I use these levels, if you've seen this channel before, is the first time we hit these kind of resistances, it's looking to play the pullback, taking some profits, moving stops to break even. Now, if it ends up coming back to retest it, again, stop out on whatever position I got left at break even, look to wait for that kind of break through this level. Again, that's not what I'm going to trade. I'm waiting for that pullback to this level, and if that level can hold as a support, then that's when I might jump in and look to play the trend, because that's more likely than what is going to happen. So these are the key levels I'm paying attention to. As of right now, I said, if you're kind of able to trade more than the one commodities, which I mean, if you're trading futures, you probably can. I think it's a lot cleaner to be looking at the crude oil, and again, that's why we made the video on that before this one, because I think it's just a lot easier to be trading. As of right now, I think nat gas is in a bit of a harder situation to be trading off. Anyway, that is the breakdown on nat gas. If you enjoyed the video, why not drop a like and subscribe, and check out this video on crude oil.